Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
All right, we're back for another exciting episode of Black and White Market Minute. Aaron's on the road with us today, but we've got him linked in and ready to talk about what's going on this week in the market. Aaron, what do you have for us today?
Hey, we're in July. Market's going up. Everything is feeling good. We had a fantastic week. I think the market was up a little bit over 2%. A lot of that came in one day, but we'll take positive any day. If you look at what's going on, it's really a head scratcher. Biggest thing for what's going on right now is that the market is excited that the Fed's not going to raise the interest rates by 1% next week. They're only going to raise it by 3/4 of that, so 0.75%, and the market is cheering that. The inflation rate we got last week was really high, a little bit higher than expected, but most of the other economic indicators have come in a little bit weaker than expected, and weaker is good right now. Earnings have been coming out, and they weren't as bad as we expected. And the market's cheering. So we'll take what we can get right now. It feels good. Some of the biggest things I'm really looking at is, oil's coming down, which is good. It's not down. I think, gasoline's $4 a gallon right now, so it's still painful, but it's not as bad as it was. Another big thing that's been driving the market is how strong the U.S. dollar is. And think about this, guys. When the dollar is strong, things are cheaper for us. We live in a country where we import a tremendous amount of things. Look at almost anything you own and check out the back of it. It's going to say made in China, made in Taiwan, made in Mexico. Well, when our dollar's strong, that makes those goods cheaper for us. And just imagine how bad it would be if we didn't have that stronger dollar. Think how bad inflation would be. Look across the pond, look at Europe, what they're struggling with. And a lot of that has to do with our strength. Anyways, back to the point. The ECB, or the European Central Bank, they raised interest rates by 0.5%. They're not going to be negative anymore. So this runaway price of the dollar is going to start coming down, and that's really, really going to be beneficial. So we're kind of in this catch-22. Is what is inflation going to be next month? Is it going to be coming down as fast as we want? Looking at some of the preliminary numbers, it's looking that way. Still extremely painful, but it's not runaway 9%. So we're going to be in this kind of lull in the market of what is going on. What is our next steps? Are we going to be running into a recession, or does the Fed give up? Do they stop? Do they think that they did a good enough job of controlling what they could, and we can let this market take back off?
Yep. I like your point, Aaron, and I think one of the things that's going to be really interesting, I think this is the first time that we've seen some weaker data. So it's really going to be really interesting how the Fed does react to that, and we'll have some clarity next week. And one of the things that I was listening to this morning was, jobs are getting weaker, meaning people are putting hiring on freeze. They're even letting some employees go, and that's very real on the streets. And not all that's been baked into the unemployment numbers yet. But the biggest thing that they were referencing is if the Fed's got to basically pick a stopping point and then hope that they did it correctly. And so if they didn't do enough, this thing's drawn out for potentially years. If they do too much, it's a short-lived, much more painful reaction, right? But then we can get on about our day. Of course, we're all in the camp of short-term pains better than long-term reality. But what are your thoughts to that, Aaron?
Absolutely. Let's get this out of the way. I mean, we all know the game. I think I may have spoke about this last week. The market does not believe interest rates are going to be this high next year.
Right.
You can go see what they call it the dot plot, or what interest rates are expected in the future, and they're expecting them lower. And nobody has a crystal ball, but you got to remember the Fed said that. The Fed came out and said that they were going to be aggressive in raising interest rates so they could lower them by the end of this year. So it's got to come down. So I would rather them throw the market into a tizzy really short term, really jack it up. I mean, put a freeze on this. Could you imagine if we could be done with this by the end of August, beginning of September, and then the market starts to turn? Give me that all day long instead of trying to figure this out in 2023 as well.
Yeah. I love that. I love that perspective. And so we're really waiting on the Fed to react. And I want to, as we get wrapped up here, we've running into a time crunch, but I want to touch base really quick on the fact that some people don't love the volatility of what's going on, right? You know, each one of us is unique in our situation. And I just want to take this opportunity to remind folks, if there's something out there that's being brought to your attention, talk to us about it. You know, we've have some clients that have brought up, you know, indexed annuities or fixed annuities or guaranteed income. You know, we have the ability to provide all of those types of things, and we'll be very real with you about the pros and cons of each thing. You know, we sit here and try to be very proactive in the market, and you're hanging with us through that opportunity. But I just want to say, at the end of the day, each individual person is a unique story. And for some people, it's very comfortable. For some people, it's not. But we're here to serve you, here to help you. So if there's something you're hearing about, give us a call, talk to us about it. We can talk about a wide array of things. And don't, for those that don't care about what the Fed decision is next week and they care about what their income looks like next week, we can talk about that too. So, but when we get wrapped up here, thanks again for jumping on with us. We'll be back next week with a little bit longer episode of our Black and White Market Chatter. But for now, today, this is Matt Ervin and Aaron Kennedy on Black and White Market Minute. Hope you all have a wonderful day and a great weekend.
God bless everyone.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton and Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton and Associates Incorporated.